So and then there's lots of places that have been left for dead, and that's where I like to look. So the looking, so I love the spinouts of pharmaceutical companies. These names are great places to hide with um, with a potential either inflation or a recession. They have pricing power, and they also have steady demand. They've been spun out of large pharma. There's four names that I own, and these guys are have been loaded up with a lot of debt by the pharmaceutical companies that spun them out, and so and they've also new names, so they're not in the public's name, and because of their level of debt, people get fund managers that say we only buy quality, high quality names that can't buy them because their debt's rated triple B, you know, but they generate a ton of cash, and the cash is very steady even in a recession. The average investor is just not aware of them, so they often trade at single digit PEs. Yet they have, free cash flow yields that are 8, 9, sometimes 10%, which is through the roof. And they are paying down their debt. They pay nice dividends above 4%. And as they pay down their debt, they're going to raise their dividends. And so this is a long run dividend play that's relatively safe, that's overlooked.
Okay. So what are they?
So there's Haleon, HLN, which was spun out of GlaxoSmithKline. There's Kenvue, which was spun out of Johnson & Johnson, and Kenvue does Noxzema. They do the Tylenol. There is Organon, which was spun out of Merck, and Viatris, which was spun out of Pfizer, but it was a combination of Mylan and Pfizer's Upjohn Pharmaceuticals, and that was spun out, and that's Viatris is VTRS.